Welcome to the accounting class. In this session we are going to take a look at those entries that are required when we make sales. The business that we shall consider is called Lawn Care, who specialise in selling garden equipment. Lawn Care makes sales on credit terms and for cash. So let's consider the various cash sales first. Payment may be made by cheque. A cash sale is made for $650. What are the accounting entries? A debit to the bank of $650 and a credit to sales of $650. Suppose that a customer pays in hard cash, that is, pays in dollar bills and coinage. A lawnmower is sold for $150. Do the entries differ? No, we are still having a debit to the bank, this time for $150, and a credit to sales for $150. How about using that debit card? Donnie Elder uses his debit card to pay $400 for the lawnmower that he purchased. It is still the same form for the journal entry. Debit the bank with $400 and credit sales with $400. The money will be transferred to Lawn Care's bank account by EFT, electronic funds transfer. Have we exhausted these possibilities? Not quite. Shirley pays $500 for her mower using a Visa card. The money is still transferred to the bank account of Lawn Care. Again, debit bank with $650 and credit sales with $650. These all represent cash sales. Whether the payment is made in dollar bills, by cheque, by debit card or by credit card, the money and the goods are exchanged at the same time. This is how we define cash sales. There will be occasions when goods that were bought for cash are returned for valid reasons, and under these circumstances, Lawn Care offers a refund in cash. A bird table purchased for $70 cash is returned. What are the journal entries here? A sales returns account is used to record the return. This account is debited with $70 and the bank is credited with the $70 returned to the customer. Note that a business will nearly always choose to use a separate sales returns account to keep track of returns, rather than to debit a sales account. Many growing businesses will expand their sales by making credit sales, and most large wholesalers and manufacturers will have credit sales. Exceptions are often large food stores and retail chains, whose sales consist entirely of cash. When Eve purchases her lawnmower on credit for $1,900, a journal entry is made. The debit will be made to accounts receivable for $1,900. This account is an asset account that records the amount that debtors owe to the business. The $1,900 credit will be made to the sales account. What happens when a customer makes a payment? Hayley Lyle makes a payment of $450 on her account. Lawn Care has received money, and so a debit is made to the asset account of $450. The credit is made to accounts receivable. The amount owed by debtors to the business has been reduced by $450. When a credit customer returns a lawnmower, they are given a credit memorandum or credit note. Roberta receives a credit memorandum for $150. So what has happened in accounting terms? The sales returns account is debited with $150 since the income from sales has been reduced by $150. Accounts receivable is reduced by $150 since the debtor no longer owes the business the $150. Regular customers and customers who have a large volume of business with Lawn Care are offered a discount. The purposes of a discount are twofold. The main purpose is to try and promote faster payments from debtors. A secondary purpose is to help to retain the customer for further sales. The terms are found on the invoices of a business, and they're usually printed at the bottom. Terms such as 27 or N30. What on earth does this mean when we translate it into plain English? Well, the first part indicates the discount and the time available to take advantage of the discount. So, 27 means a discount of 2% if the business receives the money within 7 days. Well, that's easy. The second part confirms the terms offered if the discount is not taken. In this case, N30 means the net amount. The full amount on the invoice must be paid within 30 days. So, let's see what happens. Donut is a credit customer who runs a landscaping service. He purchased 5 mowers at $400 each on April the 26th. His invoice shows the terms from Lawn Care of 210N30. So 2% discount is allowed if payment is made within 10 days. The journal entry for the sale is recorded as usual, a debit to accounts receivable of $2,000 and a credit to sales of $2,000. It is May the 1st. Doe is within the 10-day period when he makes his payment, so he is entitled to take that discount. He makes his calculation. 2% of $2,000 is $40. Now he can write out that cheque, having taken the $40 off the invoice total. His cheque is for $1,960. When the cheque is received, Lawn Care will make a debit to the bank of $1,960 and a debit to an account called Sales Discount for $40. A credit is made to accounts receivable since the amount owed has been reduced by the full $2,000. We have not considered yet one feature which will apply to most sales of goods or services. This is the sales tax that is added. Usually there is only a sales tax from the state, but there can also be additional sales taxes added by a city or by a county in some states. Sales tax will be a liability that is paid to the state. It will be recorded in a liability account called sales tax. Let's assume that the sales tax in the state where Lawn Care operates has a sales tax rate of 7%. We shall reconsider the sale of the lawnmower made to Kate Lawrence, this time including the sales tax. The mower cost Kate $650, but she then has to pay an additional 7% to the state, which is collected by Lawn Care. So 7% of $650 is $45.50. The total price that she will pay for the mower is $695.50. The journal entry will show a debit to the amount of the full amount received from Kate. That is $695.50. There will be 2 credits. The first records the revenues from the sale, a credit of $650 to sales. The second records the liability of $45.50 for the sales tax that will eventually be paid over to the state. When a refund has been given on a return that originally had a charge for sales tax, we have to remember to return the customer the amount of sales tax that they were originally charged. When Holly returns a mower that cost her $535, a total of $35 of that was for sales tax. Holly is entitled to that full $535 for the sales return. Lawn Care now have to record this transaction. There will be a credit to the bank for the $535 returned. There will be 2 debits. The first for $500, which represents the sales return. The second is a debit of $35 to the sales tax account, since this reduces the liability of sales tax. This ends our session on the recording of sales. Thank you for watching and for listening.